Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and analysis. Today we're going to talk about Finviz. This is the Finviz Introduction. You will be learning how to use it, how to find stocks, and essentially grow your wealth. I believe that this is the most powerful tool in the world, in my opinion. Um, I know this tool, this website has changed my life, and I'm very excited to show you guys how to use it and basically get as much value as you can. This is the free version. Oh, whoa! Look at that. Yeah, please, if you could, just go ahead and subscribe. That really helps me out. Thank you for doing that. Um, Anyway, back to this. So I'm just going to do a little intro of what the landing page looks like. This is finviz.com. So right up here at top, it shows three different charts. So we have the Dow Industrials, we have the NASDAQ, and the S&P 500. These are basically different indexes that track the market overall. Typically, when these are red, you will see that your stock could be red depending on what sector or industry it is in. Just going on down, I'm going to go ahead and shrink myself actually really quick to let you guys see more of the screen, get my big forehead out of the way. I'll go right here in the corner. Okay, so what we have here on the left is stock gainers. These are going to list the most gains in a day from top to bottom. The signal is going to tell you over here what exactly it is doing. So we have top gainers, new high, overbought, unusual volume, etc. And over here on the right is stocks that are falling the hardest, top losers, all the way down to insider selling. Very cool. Not very useful for us. Sometimes we will see our stocks on there, typically on the most profitable side. And then over here we have a heat map of US and I guess global stocks on Finviz. As you can see, the technology has Microsoft, Apple. These are red. We have some green in here. Right here we have a bright green. This it's not showing us, but if you click it, it will open a new page and navigate you there. We are not going to pay attention to this. I'm just giving you a rundown of what this page looks like. And you can see these flowers. I recently bought flowers for my sister, so I am getting flower ads. Happy birthday, Sarah. You can turn this off with the Google Chrome extension, which I highly encourage you to look into. Also over here, we have tickers that are in different signals on the left and the right. Again, we're not going to let this program dictate which stocks we're going to get into. We have news here, and then we also have data readings that affect the indices. So the Dow, NASDAQ, and S&P 500. These are likely going to move the markets. You know, typically we don't like when I say I mean we typically are going to avoid companies, stocks that are very dependent on market moving news. So we're not going to be in like the big, let's say Chevron. So it's very volatile right now. Went up, it's going down. I typically don't like to be in the big mover names, but you will notice when you do hold some stocks, let's say like Kroger, that will be affected because we are in a supply chain crisis right now. And, you know, a year ago, it might have been in the clear, not a big issue, but now it's affecting Kroger, Target, Costco, things like that. So you can own a company that will be affected by global turbulence. So that's something to keep in mind. Over here, we have earnings releases, again, where we don't care about these companies. One thing I do like to see is insider buying and selling. Typically, this doesn't pertain to us, but it's just kind of cool to see. Like right here, we see $254 million sold by two different people. That's pretty crazy. That's $500 million. Again, This is just the homepage, nothing we are going to typically use. We are 100% only going to be in the screener, and we will be using these data points. It can look a little intimidating, but I promise you I'm going to hold your hand and we are going to get through this. So these are all the data points. I'm sure if you're watching this video, you might not know exactly what a PB is, price to book ratio. So I'll do a video going over data points we are going to look at. I do apologize in advance. It is going to require attention, taking notes, and, just being engaged. So, yeah, with that, I do have some homework assignments I will be distributing as well, for you to do. What the hell? Nothing beats a gentle poop? That's weird. So sorry, that just totally distracted me and it's so random. I have not looked up any poop stuff. But anyway, this is what we're going to be using. I do not recommend you buying the premium version. I use the free version to get to 7 figures, and I am very confident that when we do the $20 to $1 million challenge, yes, $20 to $1 million, we will get there using the free version. But first, like I said, we are going to lay the foundation. I'm going to teach you how to look at certain data points, how to filter out stocks to look at, what not to look at, how to archive those, how to chart them out, how to do qualitative analysis, quantitative analysis, and basically get a feel for the company that we could potentially be investing in. And I do have a disclaimer. Don't listen to me or follow what I do because I have no idea what I'm doing. Although I made 7 figures, maybe it's just 6 years of good luck. Who knows? So that's my little disclaimer. So let's get into some, just a quick example of what we want to see here. So you have about, I think it's 46 different data points. Let's say we only want to look at countries in the US right here. And we want to look at companies that are massive. We're going to go to market cap and we are going to look at mega, 200 billion and more. So these are typically going to be the safer stocks. This is just a quick example. Out of the 8,500 stocks that are available, only 41 fit this category. Again, these are the somewhat safer companies, and we will go into the different tolerance levels of safety, value, income, and growth. So more to come there. And I want to remove these filters, so I'm just going to hit reset. And so for you, I have 2 homework assignments. Number 1, you're going to create a free account on finviz.com. This is the register button right here. You're going to add your email and create a password. I don't care what it is. Just do it because it's going to allow you to do other things down the road that we might do. It doesn't necessarily help us along our journey, but it helps monitor the data in terms of, if you take a big position in Apple, you can add that to your portfolio and call it like your safety long-term growth portfolio, where you have Apple, Berkshire Hathaway, and Airbnb, let's say. So homework assignment number 1 is do register on Finviz and also do this. You are going to write down 5, I need to move my mouse. Stop. You're going to write down 5 to 10 products, stores, services, etc., and then type those into Finviz to identify the ticker symbols. So let's say Apple. You're going to write that down, and we're going to go to Finviz and we're going to type Apple. Is that a real company? Yes. Okay. Did you type in Apple because you have pineapple slices that are in a can from the Maui Land Pineapple Company? Maybe, maybe not. Did you type in Apple because you know of a hospitality real estate investment trust? Maybe not. Did you type in Apple because you have a cell phone? Probably. So, this is what it looks like for Apple. So you're gonna do this for about 5 to 10 different companies. Don't hold back. The goal with this is to start thinking about things you do and use, and how you contribute to those companies' profits. So, for example, you go to a Starbucks, it always has a line that's disgusting. There's always one or two people inside the store, and there's always one, two, three orders of mobile pickup available. You're buying their coffee, you see that they have a stock, you're contributing to the company's profits, which in turn grows the company's stock price. Maybe you want to consider buying the stock. Maybe you don't. Um, that's just an example. So Apple and Starbucks you can't use, but again, look at things that you have: mobile phone provider, appliances, grocery store you go to, clothing store, seasonings in your cupboard, electronics, coffee shops that are nearby. Don't use Starbucks. Use other ones. Um, and yeah, that is today's episode. We are going to go more in depth on the next one, where we are going to talk about how you want to approach your investing style and what I do. Obviously, if you're 18 to 30, I would recommend that you go more into um, the growth section, the growth style, the path of growth. But if you're like 75 to 80, maybe you're going to want something safe. But if you're going to be safe, you want to make sure you're getting that money. So we'll get into that next episode. We're going to drill in how to identify what risk tolerance we want, and start to dig into Finviz. That is all I've got for you guys today. So I hope you have a wonderful day, and I'll talk to you soon.